Welcome back, my friend, to the Stocks, Options, and Dividends show that never ends. It is your best friend in all things, I don't know, Pepsi. All things Pepsi. It's your best friend checking in here, Bart Divvy from the Wealth Snowball. Please take one moment just right now. Click that subscribe button, like it, love it, share it, leave a comment. We're back. Jay Powell, our buddy Jerome Powell just spoke. The market did some crazy roller coaster things during that interview, that conversation. I know he gets a lot of bad publicity, but I like Jerome Powell. What? Are you crazy? No, I kind of like him. Anyways, here we are. Hey, you remember that time when Michael Jackson's hair caught on fire on the set of a Pepsi commercial back in 1984? No, Bart, we're too young for that because you're an old goat. Well, I wanted to take a look at Pepsi for a couple of reasons. Pepsi right here, not only because back when I did chug a lot of the carbonated sugar water, I drank Pepsi, but it's been about 7 years since I've had a carbonated drink. But look at the products that this company has: PepsiCo, Pepsi, Lay's, Mountain Dew. I'm all hopped up on Mountain Dew. Quaker Oats, Gatorade, Tostitos, and then this thing. Soda Stream. I remember one year, Lady Cooks a Lot, aka my wife, she bought me a Soda Stream for my birthday. She was all excited because I would drink so many Pepsis. She thought we would just make them here at home. It would be so efficient. So she got me a Soda Stream. We made the first round and it tasted like dirt and a dirty racquetball. And I'm like, what in the world? She was like mad at me because it tasted horribly bad. But you may have a Soda Stream and like it. I didn't. I enjoyed the real thing, and that would be Pepsi. So let's take a look at a couple of things over here. Pepsi currently trading at $170.74. It's down $1.08 today. Currently, we're fairly flat, although the NASDAQ is showing some signs of life at 1.14% gain in the green today. A couple of reasons I'm looking at Pepsi. One, I do want to own Pepsi long term, the big picture. Got to look at buy and hold for some of these things. Although in 2023, I'm a little nervous overall about the market. So that's why I'm looking at options as kind of a fun little paid hobby, along with the opportunity to put my way into some of these positions at a lower price than current asking. So 170.85. But here is why, and I would not recommend this. And remember, I am not a stock options and dividends expert. I only play one on YouTube. On the YouTube. No, as you can tell, I don't even play one on YouTube. I am just a novice at these things. So I wanted to share my journey with you in real time as I learn about the stock market, as I learn about collecting the dividends and the companies that are worthwhile in holding my money as an owner. So Pepsi is one of those that with all the products that they have, how can you go wrong with these things? I mean, who doesn't like Ruffles with ridges? I know I do. Tostitos, rolled gold, bubbly. I've seen old lady Bubbles a lot. She drinks some of that stuff from time to time. And I'll tell you what, there's no better Frito than a chili cheese Frito. Can I get an amen? Yes, you can. You can get an amen on that. So let's look at the Pepsi, a couple of things. They have earnings date 2 days from today. So that's, as we talked about earlier today, this is Tuesday, February 7th. It is now 1:38 p.m. Central Time right here in the great state of Indiana. So in 2 days, they will report earnings. What I'm thinking is they're going to beat on the earnings. So the market should adjust accordingly because we don't necessarily want to buy in these numbers. I still think that Pepsi is a bit overpriced. Let's see what my friends over here at the Alpha Spread say. That's best case there, Bart. Let's go to base case. Right there, Alpha Spread believes that at current value, Pepsi is overvalued by 9%. At a base case, they should be more around 154.92. Worst case, down here at 125. Whoa, that'd be a nice number. But if I can get into this great company, this Pepsi Cola, this PepsiCo with all their Fritos and Tostitos and sugar water drinks, if I can get in them at a nice value, I'd like to do so. And then I will sell covered calls on them And then in the meantime, I'd love to collect some dividends. There's 2.68%. And then when I look at trading options, before we look at trading options, let's look at Seeking Alpha. The propeller heads have it at a hold, Wall Street has it at a buy, and the Seeking Alpha authors have it as at a hold. 52-week range right here, a low of 153 and all the way up to 186. So you can see it shows it's basically in the mid-range there, but it's certainly closer to the high than to the low. But they do have a earnings date coming up, and then also they have their ex-dividend date. And we like those because we need to be involved in the ownership of this asset prior to this date here. So we would need to be an owner one business day prior to this date in order to receive this payout of $1.15 a share. And they did just announce that this upcoming dividend will be $1.15, which is the same as it's been the last few quarters. But wait, back up here, Bart, back up here. They have paid dividends for how many years in a row? 50 years in a row, with 50 years in a row of dividend growth. So that makes them long live the king. They are a dividend king, and it is a product that we know what they do. We do know what Pepsi does. And I don't think even in a recession, people are going to stop eating chili cheese Fritos, Tostitos, and the Pepsi, especially not that Mountain Dew, that chemical. So you look at their quarterly, this is their quarterly payouts per share. They just announced had the declare date of February 1st, ex-dividend date of March 2nd, record date of 3/3, and then we'll get paid at the end of March, $1.15 a share. And so at some point in 2023, they will announce another dividend raise. So that will then continue their streak of consecutive years of dividend payment and dividend growth. So we'll be looking for that. But their valuation, they're getting a D right there. That's a D? You'd fail with a D. So we want to get a little bit of a better valuation. And if we do get into a stock option that is put to us, that is assigned to us, that is below the current price, then we will be just fine with that. So let's see what Pepsi is trading at right here as far as the options are concerned. We'll go to sell put, which means, I know, and it's backwards. It took me at least a month to figure out even what half of this stuff means. So you're selling a put, but that obligates you to buy the stock? That sounds crazy. Yeah, that's the truth. So when you are selling a put, you are obligated to buy that stock at the strike price that you choose if indeed that underlying asset, which is PepsiCo, hits or goes below that strike price. So what I'd probably like to look at is this 162.50, which would be collateral. They would grab $16,250 from me and hold that as collateral for this put. So that's a lot of money to put up as collateral in order to collect a 23-cent, which then turns into a $23 premium option for us. 91% on the probability score there. Delta is down at 0.8, so about an 8% chance of this being exercised, or worse, because again, if it during this time frame, if we were to move forward with this contract expiring Friday, February 10th, and that stock went down to say $160, we would be obligated to buy at $162.50. So of course that is the risk involved. And then on the opposite side of that trade is always going to be another trader where they are buying a put, which gives them the right but not the obligation to sell me their shares at a certain price. So as far as this is concerned, some will be on the other side of this trade if I go forward with a $162.50 and collect $23 in premium. But when I like to do calculations, and again, I'm just starting to create my own processes and my own theories on this, we'll get out the old abacus here and we'll look at, so there's $23, right? $23. And if we divide that by 16,250, okay, that equals 0.001. So if were able to execute this type of trade every other week, so that would be 26 times a year, then our return on that should be about 3.6%. Hey, that's not enough, is it, Bart? It really isn't. It's not enough return for putting up that type of risk on an annualized basis. Now, of course, we're still going to be collecting the sweet divvy, but those two numbers together just isn't worth the risk. If we add up the 2.68% and then we also add it to the 3.6%, we want more action than that, Jackson, on this particular asset. So let's look a week out now. Here's what happens. We're going to look a week out, and obviously that increases our risk, okay? Because time can do so much. It can do so much, especially to these option contracts. So you see the difference here. Now we jump up to $54 on that trade with an 87% probability. So that's still a great number there at the same strike price of 162.50, delta of 13, and the implied volatility under 30. So we will probably move forward with this trade, but let's first bring out the abacus, check our math. So that's 54 divided by, carry the 1, 16,250. That equals 3 times 26 trades. If we were to execute this exact style of trade with these exact returns every other week on average, which, we're 10 days out there, so we're under a 14-day number, but we're looking at 8.6%. So if we take the 8.6 and we add the 3% of the divvy, would I be able to be interested in Pepsi Cola, PepsiCo, with all their Fritos, their sweet tasting Fritos, and they're jacked up on Mountain Dew chemicals for 11.6%, return or dividend? I would. So let's go ahead and look to that right here. We'll just do one contract, selling the put. So that's an obligation to buy. If this 162.50 strike price is hit or goes lower during this 10-day period between now and February 17th. So can we collect our $54? We may collect more. We did not, but of course it was easily filled, and we have a little bit of impatience when it comes to filling our orders. There's $54 in the old pockets, and then what I'll probably do off camera is I'm going to make the same trade in my IRA over on the Vanguard and my brokerage on the Vanguard, and then when I have a recap of the weekly trades, I will go over what those numbers came in as well, because in the IRA, or I should say in Vanguard in general, after they give you like 25 free trades a year. That's it. Yep, that's all. And then after that, it's $1 a contract. It's $1 a contract. Man, that's a lot of money. It is. And that's why Robinhood, not only does Robinhood have a much more efficient and easier to use platform for trading, it's also free. They don't charge you, oh, how much is that commission, Bart? Tell me. It's still 0.0 dollar bills, y'all. And any money that's not in use, if it's not in use, then your money is collecting interest. At what rate? Well, let's find out. That rate would be, look at that. It's actually higher now. Yeah, it is. They just raised the rates, remember? So we're collecting 4.15% interest on this pile of cash, $63,688, for it to just be sitting there, very nice, and collecting this money. So this is a year, as I said, 2023. I'm a little nervous about it in general. So we might find ourselves in a bigger cash position in the year, trying to put our way into some assets we want to hold long term, and then sell conservative calls on those once we have them, all while collecting over 4% interest on said cash that is not in play. So that's what we have right here. Pepsi Cola in play for us. I'm going to go into Vanguard, make a couple moves there, and then I'll check with you in the next video. If you could do me that huge favor, if you can subscribe to this channel, If you can like this lovingly prepared video, I don't think it's lovingly prepared. You just get on and click clack around. Leave me a comment, share it with some lovable friend of yours that may be interested in such a thing. I will then see you in the next video.